The trend is your friend. Ride it until its end, until it reaches its bend. But how do you know when a market is reaching the end of a trend? Well, today we're going to dive into Quant, which has 3x since June 13th, which is 300%. And we're going to see a particular simple pattern that shows the end of its trend. With my book, award winning book, The Extraordinary Venture Capital Opportunity How to Invest Like a Pro, I normally read a quote at the end, but I want to start today with a quote. And it's from Leonardo da Vinci because it's going to be so important that we're going to apply this when we're looking at the price data on Quant. Simplicity is the ultimate sophistication. So we want a nice simple methodology where we can see the end of a trend before it occurs so we can maximize our profits. And by the way, if you want a copy of my book for free, in the description link below, you can go to my website and you can now download it for free. Some real gems in there. Talk a lot about mindset and goal setting. But let's dive into Quant and see if we can spot the end of the trend before it reaches its bend so we can take profits at the key pivotal moments. So Quant is actually a really, really strong project. The future of finance today is basically blockchain, empowering companies to use blockchain for different sectors. And I was just going through their website, financial institutions. It's quite cool what they're doing from compliance, payments, supply chain, XYZ. But what we're going to look at today is pure price action because though the project itself is very strong, top 50 cryptocurrency, I think is 42 at the moment in the top 100. What drives price is buying and selling behavior. And that's where technical, especially short term, less than a year, less than 6 months, really is stronger than fundamentals. So let's go into our live chart with Quant. And there's a couple of things I'm going to focus on today. There's going to be momentum. That's going to give us a big clue. Basically, it's the rate of change. I'm going to talk about that. And then we're going to look at pattern as well. And then we're going to look at something called Fibonacci price. And if you're new to these concepts, I want to invite you to join me in my R15 Crypto Gym. We're actually doing a 30-day trial for £1. You're going to get a lot of goodies, a lot of goodies. One of the things you're going to get is access to Quant. I'm going to update the chart so you can actually access the chart over here. But we have something called the Crypto Gym. But what I want to emphasize, we have also something called the Bootcamp, the Crypto Gym Bootcamp, where I educate you, upskill you on Elliott wave theory, Fibonacci, and that's what we're going to use today in keeping things really, really simple. So let's now just jump into Quant. So what we're going to do first of all is we're going to look at momentum. Now, momentum, there's thousands of momentum indicators, and they all pretty much do the same thing. They measure the rate of change. My personal favorite is stochastics RSI. It's basically blue and the red lines. And basically what it shows us is when the blue line crosses below the red, it tells us we're likely to see a weekly top. So we're on a weekly chart right now. And what's happening right now with Quant is the same thing again. The blue line is crossing below the red. So what that tells us, even if we just look at it from a logical perspective, forget the fundamentals for a second, forget what Quant is doing, whether you love it or hate it, wherever it is, you can see over here, this top coincided nicely with this particular crossing. So what should we anticipate over here? Well, probably a local top. But what we want to see is this low likely to get exceeded, or are we just going to get some type of correction? And that's what we're going to dive into today with a bit of detail. So I'm going to pop out this chart and go into a daily chart where every bar will represent one day. So I keep that in the top right hand corner. And by the way, if you want access to this exact chart with the exact settings, you can actually you can download the charts for free now, even without joining the gym. There's a chart button, and you'll get all these charts for free, and you can upload them into your own trading view. All right. So what we're going to focus on first, right? So we looked at the weekly momentum. That gives us a clue that we're likely to have a local top sometime soon in the next 1 or 2 weeks. But when I'm looking at this, I want to see, is there a chart pattern of 5-wave structures or a 5-wave structure? Because what Ralph Nelson Elliott figured out in the 1800s, this dude, very, very clever dude in the space of psychology and ratios and mathematics, is he realized that markets tend to move in 5s and 3s. And when we can spot the pattern, we can see the end of a trend with high probability before it occurs. And that's what we're going to talk about today with high probability. So I'm just going to go to a line chart, mainly for your benefit. And do you and can you see a 5-wave structure to the upside? even if you pause the video and see if you can point at the screen and see if you can see a 5-wave structure. Well, what I see over here is a very nice wave 1, a wave 2, a nice clear wave 3, an ABC of a wave 4. So it's like textbook stuff over here. And then we look like we're forming, not ending, forming some type of wave 5. Let's go back to a bar chart, and we're just going to go to the extremes now so we can see extremes over here, over here. So what this tells us, why this is so valuable to us, is it tells us we've got an impulsive structure to the upside. This is an indication that Quant is making a new trend on the upside. So I'm just going to show you something. I'm going to zoom out really all day from over here. So Quant's obviously made a big correction, right? Big correction since, when was this? This was since September last year. But what do you notice about the green, what we've just drawn? Do you notice anything? Well, what I'm going to show you is this, right? We're gonna highlight this. This is not finished yet. And what I'm looking for is an overbalance of price. Because there was another smart guy called W.D. Gann from the 1800s, 1900s, and he said when there's a new trend unfolding and the price movement to the upside is bigger in price and bigger in time than any former movement, that's a good early clue that we're seeing a reversal and a new trend unfolding. So there's a couple of things we're going to talk about. So I'm just going to do a comparison and go, okay, this green box is bigger than these moves. This green box is bigger than this move. It's bigger than any former move to the upside in this whole sequence. So this tells us that we have an overbalance of time and price. Why is that really, really important? Well, it indicates that this low is likely to hold and not get exceeded. We're just talking probabilities here, by the way, probabilities, no guarantees. We can only ever do probabilities and never certainties. So that's valuable information. But what we're going to focus on today is the end of a trend for Quant. So the intermediate trend, like what we're looking at right now, is clearly up, right? Right. There's no two ways about it. It's clearly up. But what most people, where they go wrong, is they start buying over here, not realizing we're coming towards what looks like the end of a 5-wave structure. And what typically occurs after a 5-wave structure, from a buying and selling psychological perspective, is you'll normally get a 3-wave correction, which is a retest over here. But because this impulsive sequence to the upside is very, very clean, it's likely we're not going to exceed this low, and Quant is going to hold. And then what we're going to get, more than likely, I'm going to go into a bit more detail in just a second about the 5-wave structure, is we'll probably get something like this, right? Which is an impulsive move where the market expands to the next buying cycle. It's called a wave 3, right? So that's what we're going to look at today. But today's focus right now is the immediate end of a trend, right? So if you were lucky enough to be holding Quant and bought Quant down here, you want to be very aware of this 5-wave structure. And we're going to do something called Fibonacci price analysis. We're going to do some price ratios. We're also going to do some time ratios. And we're going to see where is the high probability end of a trend for Quant, and where you should consider taking profits or tightening your stop loss if you're long on Quant. Right? So that's going to be important. And notice that we're talking about technicals here. We're talking about buying and selling behavior of the individuals betting on the price. All right, so what we're going to do, I'm just going to clean this up here, is I'm not going to go into too much detail, but there's really two main ratios because these waves have a relationship to one another. And if you know these key core relationships, I go into them in some of them in the R15 Crypto Gym, in the bootcamp, in some of the training. I've extracted some of my key lessons from some of my advanced courses, and you'll get this training. But there's two key ratios that we really want to be aware of. Most end of wave 5s have a relationship to wave 4s. This is the wave 4. What is the relationship? Well, it's called an external retracement. So I'm actually just going to measure this external retracement. It's the peak of wave 3. I'm going to take the peak and the extreme of wave 4 low. And the two key ratios that are most typical, most common, most highly probable is the 1.272 and the 1.618. So this is the region. There is another ratio. If it gets exceeded, then we need to look at that, but this is the most common. And then the other one that we really want to be aware of is something called a price extension. We're going to measure wave 1 to wave 3 and project it from wave 4. And the most common ratios for this relationship is 38, 62, and 100%. Right? You can see the 32 is irrelevant because it's right down here. So what we've now got are basically two zones. We got this zone over here. And we got this zone up here. Still quite broad, but I'm going to cover a bit more detail on what's most highly probable. Now, the thing to note is that there is no way of knowing when the end of the trend will occur. Like, you could way shoot past these targets, way shoot past these. But we're talking about probabilities here, where what is most common, especially when we're seeing clean chart patterns like this. Just so you know as well, we're going to do this in the end. This over here is also breaking down to a 5-wave structure. And often you'll see the final part of the move to the upside also break down to a 5-wave structure, which is called 2 degrees of wave count. So I'm doing a lot of detail here, but this is important because it's valuable leading information that we can prepare ourselves for long in and short in the market, and just knowing what's likely to occur. So we'll just do some time analysis as well. What we're going to do is just going to measure some rhythms. How long did it take for this high to occur? And we're going to project that forward. How long did it occur for this low to this high, and project it forward? I'm just going to keep it really, really simple for just those two. Actually, I can do 3. I got this in my advanced training, but these are Fibonacci time ratios, which can really tell us some very valuable information. I'm just going to clean this up like so. And I'm just going to do one other one. This is called a low to high, which is a typical maximum, very reliable on how long the maximum will take. So we know the top is likely to occur by or before the 21st of August. Now that's pretty cool, right? We can see a really, really clear date. So now with the green boxes, what I'll do is I will just change them to represent the dates. So the earliest that we should anticipate the end of a correction is the 12th of August, it's around 5 days. And the latest should be the 21st of August. So what's that? That's it's a 9-day window. A 9-day window. A 9-day window. So we got price targets, we got pattern, and we got time as well. And then we can coincide that with momentum. I wasn't actually planning on going into this much detail, but if you like the idea of seeing this kind of analysis with Bitcoin, Solana, BNB, I invite you to join me on the R15 Crypto Gym. Literally in the description link below, you get a 30-day trial for £1, and you get a lot of goodies, including an invite to my private Telegram group. But you can also just download the charts. You can, if you just want the charts, these are free, no cost. You get these charts, and that's in the description link below. And I will add Quant to the available charts. So exactly what you see, what we're doing today, you will have access to this as well, this exact analysis. So what I'm looking at now is we're going to go to a bit of a high level now. We're pretty high level already because we covered momentum, pattern, price, and time. But we're keeping it simple. Remember that quote? Simplicity is the ultimate sophistication. We don't need to get overly complicated. What I want you to know, and we're going to finish on this, is we don't know when this wave 5 is going to end, right? We don't know. And it's important to know that you don't know, and there is no way of knowing. We can only just stack the odds in our favor and become the casino. But what we do know is this last part of this wave 5 sequence tends to break down into 5 waves. And if it breaks down really clearly into 5 waves, that gives us a massive clue where we can do some more detailed analysis as the market unfolds to see where it's highly probable. And as we can see over here, we can see this initial move up, a move down, and a move up. We'll probably get another move down, and we'll probably get something like this. And I'm just going to change this to a different color, a smaller size, and we'll change it to red. Let's change to red for now, and I'm going to draw it like so. If it unfolds to something like this, then we can really get into detail. And again, it hasn't unfolded like this yet. But if it does, then if the price goes below this low, something like this will be a really big clue that we are likely going to see the end of the initial impulsive trend of quant, right? So that's more than likely going to occur something along these lines. And then what you should prepare for and anticipate for, let's just assume, I don't like to assume, but we're just forecasting for a second. Let's just assume this is the top and it does unfold like this. What will more often than not occur is a nice correction. We're going to just do some Fibonacci time. And again, what I'm doing is I'm measuring market psychology of buying and selling behavior. Arthur C. Clarke said it really, really nicely. He said, I believe it was Arthur C. Clarke. He said, any advanced technology or science is indistinguishable from magic. And sometimes this stuff looks like magic. But these guys figured it out in the 1900s, Ralph Nelson Elliott. And we can just use this information. It applies incredibly well to crypto. So I'm just trying to get it all into the chart over here. Okay, perfect. That's what I'm looking for. All right, I know I've got a lot of lines here, but I'm just going to clear this up for you, just so you can prepare for what's likely to occur. And then you can just get a heads up on your buying and selling behavior, profit taking, and so on and so forth. Most corrections occur 50, 62, and 78.6%. So it's likely, again, you hear me use the term likely, not guaranteed. Probability is never certainties. And we can use this information. Is likely that we're going to see Quant make a new high, like get into the region. The way it's looking, is probably going to exceed $140, maybe up to $150 in this region. But we want to be on high alert that this may be the end of the initial trend. And then we should anticipate a correction. And what does a correction normally look like? Normally it's a minimum of 3 waves. And it will tend to look something like this. If I just draw it out like so. Something like this. Boom. Something like this. And if this occurs, this is very valuable information, because what typically occurs at the end of a correction is a continuation of the former trend. This is the former trend. And then what will typically occur, again, more often than not, because we just want a simple methodology that gives us an edge on the market, and it's this. And it will normally be a bigger move than the first move, normally by 1.618. So we're likely going to see Quant exceed $200, maybe even like $260. And in fact, I can give you an exact number of what the typical minimum is. Again, I'm getting ahead of myself here because this hasn't unfolded yet, but this is what I'm seeing is likely going to unfold, something along the lines of this. And if you can see this is clearly we're going ahead. We've got vision now, right? We're looking ahead of time. And with this vision, we can see what we can plan for or anticipate. Yeah, around $250, right? But it might go as low as like $80 thereabouts beforehand, right? So with Quant, just be mindful that we're reaching what looks like to be an end of a 5-wave sequence. Be aware of the $150 price mark. It's a very healthy move to the upside. It's a top 42 coin, but people take profits, and that means selling. And when people are selling and taking profits, it causes a correction. And sometimes the easiest way to think about it is that the market's just done a sprint, it's run out of breath, and it needs to catch its breath back. So it needs a breather. It needs a breather known as a correction, and then it's getting ready for the next sprint. And the next sprint is normally stronger than the first sprint, and that's a wave 3. And that's what we're typically looking at time and time again. So there you have it. With Quant, we're using as the example, but that is one of the ways of knowing the trend is your friend. Ride it until its end, until it reaches its bend. But with momentum, pattern, price, Fibonacci price, and Fibonacci time, we can see ahead of time what's very likely to occur, and then plan our buying and selling behavior personally to basically maximize profits, minimize losses, minimize capital exposure, and so on and so forth. And sometimes it's just to prevent you from buying at the top, knowing that we're likely at near a local top. So we go right now is probably not the best time to buy. Most of that initial move has already occurred, so that ship has sailed. Let's wait for a correction. It might take a few weeks, so it's being patient for a correction. Doesn't mean it's guaranteed to occur, but it's highly probable that it will occur. And then look at this point in the market for buying opportunities in the $80 range for the $250 raise in terms of increase. And there you have it. So if you would like to learn more about psychology, I invite you to download my book for free. It's in the description link below. I think you'll really, really enjoy it. It talks about goal setting, mindset, and just really this game is not simple, but it's easy, or it's simple but not easy. That's right. That's the one. It's simple logically, but the thing that really kind of makes it difficult is what's in between the ears, right? The brain, the mind, the psychology of human emotions and managing your own human emotions. I would also love to invite you to join me in my R15 Crypto Gym. We do daily workouts, BNB, Bitcoin, and Solana, and we've got some very high probability setups. It looks like this. I'll just show you. I think it was BNB setup today. I'll just show you a quick synopsis with BNB. We're looking to short this at the moment. I did a video on YouTube a few days ago on this. The weekly momentum is lining up. I'll just forward the video, and there's a particular pattern that says, right, we should look to short the market. There's a particular pattern reversal signal that's demonstrating itself, and we're waiting for something to occur before we consider a short trade. And if it unfolds nicely, then there's some good profits to be made. So if you like today's content, like, subscribe, hit the bell notification, show me the love, because I want to bring you daily value on how you can get the edge in your favor where you become the casino. And you know that the casino always wins. Why? Well, in the game of blackjack, a casino has a 4.5% edge over the player. And it just understands that with volume, with loads of people playing hands, hundreds of millions of dollars, the casino, for every $100 million that are betted, it's going to win 4.5 million every time. Every time. It's just the way statistics play out, and it understands that. And you want to understand that when it comes to trading. You become the casino by being patient for the ideal setup of momentum, pattern, price, and time. And when the edge is there, we trade it without hesitation or reservation in a confident, fearless manner, but without being reckless. In other words, we use a 2% or 3% stop loss, so we know our predefined risk. So if we're wrong, we get stopped out, we take a small loss, or we break even, make a small profit. And if we're right, we make a lot of profit. And that's just the name of the game. So let's just loop that quote from my book, chapter 5. It's from Leonardo da Vinci. Simplicity is the ultimate sophistication. So keep it nice and simple. Join me tomorrow for the workout. Download the charts. I will upload Quant over the next 48 hours. So it'll be up there so you can access that chart and that analysis. And over the coming weeks, we'll keep an eye on it and see how it does unfold. All right, guys, I will see you very soon.